You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO. This Week in Futures Options, the program where the name pretty much says it all. We break down the week that was and indeed still is from a futures options perspective. What's going on out there in, I don't know, the metals, the rates, the ags, the softs, the crypto. You got to tune in every week to find out. Listeners, my name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever compelling, at least we tend to think so, Options Insider Radio Network. Reminding you, if you like what you hear, keep rating and reviewing on wherever you get these shows these days. They're available pretty much everywhere under the sun. It does help the tidal wave of new people we're seeing discovering the network, discover this content. And then, of course, if you like what you hear, you want more in your life, you want to go, let's say, with great pro Q&As. Maybe you have questions about what's ripping things up and what's going on from a vol and a skew and everything else perspective out there in crypto right now in wake of the just massive announcements we're seeing going on out there lately. We got a great pro Q&A coming up to tackle that exact subject. You get those. You get, of course, Options Oddities every Friday where we break down all the week's worth of crazy, unusual activity. You get, of course, access to the exclusive pro podcast feed. We get all the episodes we've done, so you can go back and check out all of those on your own time. There's a lot of great content in there already, listeners. And on top of that, great giveaways and even live access to everything we do here. Oh, yeah, and we bump your questions to the top of the list, too, because we like you folks. So theoptionsinsider.com/pro is the place to go. And you know who I don't like, listeners? It's our guest holding down the FTSE Russell and CME Group hot seat. Why? Because he's a very demanding guest. He insists we do the show immediately after our previous show, The Option Block. So there's no rest for the wicked here. Who am I talking about? You know who I'm talking about. The mother of prima donnas himself, Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, welcome back to the show, sir. Are you happy you have your time that you requested, sir?
You know what? I kind of need to rest a little bit. Is there all right if we come back in a half hour?
Now you know. Now you see why the schedule is the way it is. But nonetheless, there is no rest for us today, listeners. We dive right on in, bravely, some might say foolishly, into the movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, Uncle Mike, you know what is required of you now, sir. Where should we begin our journey this week? To the light side or to the dark side, sir?
I'm feeling dark side today.
You're swearing on the last show. You're choosing dark side. What have you done with Uncle Mike?
I mean, pretty soon I'm going to start buying, what's that coin? Oh, wait, it rhymes with a swear word, but I'm not going to say it.
You love it. You love it. It might make you talk a little crypto as punishment today here as well. By the way, listeners, you can see this report for yourselves if you follow CME over there on the old Twitters. We also tweeted out right before showtime as well. We're doing a little bit earlier today, the show, obviously, so CME probably won't have tweeted it out yet. But it's looking even, very 50-50 this week. We can do tops and bottom tens, light side and dark side for days here, which is interesting. We haven't seen that in a while. Usually it's been very biased in one direction or the other. But this week, 50-50, even though the largest movers do seem to be to the dark side. So to the dark side we go, listeners. And you know, some of our frequent offenders, keep an eye out for them. Nat gas, Bitcoin, and lumber. Usually any given week, if you guess one of those three, you got a pretty good chance of being right. Let's see. To the dark side we go. There's a lot of dark side this week, listeners. So much that Russell 2000's off about 2%. Couldn't make the dark side. Silver, your beloved silver, Uncle Mike, just a tick outside of the bottom five. It's at number 6, actually, off 2.61% this week. It was number 2 in the other direction last week, up 12.2%. So been a rock'em sock'em couple of weeks for silver. Our actual bottom five, listeners, our actual dark side, WTI, number 5, 2.67%. So just barely edging out silver to the dark side this week. Number 4, staying in energy, we got RBOB off 2.72%. It was number 2 in the same direction last week, off 7.15%. So a rocking couple of weeks for RBOB. You know the deal. Not a ton of paper going up in RBOB for us to sink our teeth into. Then we move off to the ags. Soybean oil off 4.21% for number 3. Number 2, back to the metals we go, listeners. Platinum off 5.29%. It was our number 1 light side mover last week, up 13.67%. So a wild couple of weeks for platinum. And number 1 to the dark side, you probably could guess it. It's Uncle Mike's favorite asset. It is Bitcoin, off 7.34%. It was number 1. It was in the exact same spot last week, listeners, off 15.87%. So it's been a rough couple of weeks. Of course, if you remember last week, intraday, they had a little bit of a rally. So intriguing stuff out there for Bitcoin. I have a feeling we'll sink our teeth into that in a little bit. Before we do that, let's go off to the light side, listeners. Number 5, we've got lean hogs. So back off to the livestock there, up 2.11%. I was just chatting about livestock, the cattle, lean hogs, and all these things down at FIA with someone this week. It's an intriguing market, to say the least. And as we've seen here on this show, doing a lot more options paper, which is interesting. Number 4, off to the rates, our only rate visitor this week, the Ultra 30-year, up 2.13%. Number 3, back to energy. We got nat gas, up 2.5% exactly. Number 2, off to the metals yet again, palladium, up 2.68%. It was number 4 in the same direction last week, up 8.59%. That shows you what a difference a week makes. It was up 8.59% last week. It was only number 4. This week, it's up 2.6%. It's at number 2. So intriguing. And number 1 to the light side this week, listeners, we have oats, up 3.44%. Back to the ags, of course. Before you ask, you already know the answer. Oats, not exactly a big options player out there. Of course, you want to see these reports for yourselves. You know where to go. CMEgroup.com/TWIFO. TWIFO is the place to go. And if you want to go beyond the free versions, you want to upgrade, you want to get access to these movers and shakers reports, the pace of the roll, all the other cool stuff they have cooking over there. We really just kind of scratched the surface of it here on the show. You know where to go to get more. Bantix.com, BANTIX.com is the place to go. You get a free trial for all the cool pro features they have over there. And if you're intrigued by these markets, you owe it to yourselves to go and check it out. And I said, I was not a big fan of his today, given his impact on the scheduling, but showing what a nice guy I am, listeners, because he's on the show and because it's number 6 in the movers and shakers, we'll start with his favorite asset of all time. Yes, it's time to talk silver. It's time to head into the metals.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody. Welcome to the shiny stuff. Welcome to the metals. You guys know where to find these. Go into that drop down over there, cmegroup.com/TWIFO. Go almost to the bottom of the list. One above it, we have the metals. It's like they've added in vol indices now, which is kind of interesting. That wasn't there before, but we'll discuss that later. A metal, second from the bottom there, listeners. Then we're going to hang out in the product family, which is precious. And then going off below gold to silver. How's silver looking right now? A decently active week. 36,500 contracts on the tape. Hanging out just a bit shy of 21, about a 29.75 right now in that front future. So, Uncle Mike, it's been a pretty active couple of weeks out there in your favorite shiny metal, silver. What is lighting up your tape out there these days, sir?
Well, I mean, looking at silver, we had the lows right in early October. We've gone up probably almost darn near or around 20% in silver. And so that's in the old days, that wasn't a big deal. That was one day of movement in silver 10 years ago. But currently, that's a pretty large move over the course of 1 month. I think that the fact that if we aren't going to have, I mean, it's tied to inflation. And what's interesting is that precious metals are always perceived to be the great inflation hedge of all time. Well, I've never heard more about inflation than I have this year in my entire career. And both gold and silver are down on the year. So it doesn't always necessarily have to ring true. But what's interesting about this is that it looks like interest rates are going to go lower, there's going to be less attraction for people wanting to buy fixed income because of the fact that the interest rate won't be as appealing. So the concept would be, why would you want to take on risk of a stock, a bond, or a stock or a commodity or real estate when you could just buy a treasury or some type of bond for a 4% yield? How can you go wrong with that? Because then all of a sudden, if interest rates come down again, then the value of the bond will go higher. And if interest rates stay the same, in the meantime, you're getting your 3, 4, 5%, whatever you're getting on it. So there's a big attraction to that. But now, when we've had a little bit of news about the potential of interest rates coming down a little bit, then silver becomes a little bit more attractive. On top of that, the low levels with which it was at, we have not seen these levels of silver. The lows were in early September. We didn't quite test them again in early October, but the levels that we hit in early September, we have not been at those levels since 2000, since June of 2000, and that's right after the craziness of COVID, and the silver was down in the 10-11 area. And that had come back. It had a 50% rally up from its lows. So we were at some pretty low levels, and combine the fact that we're at a lower level and the other things with which I just mentioned, and you're going to get a little bit of a bid in the silver space.
Let's see what we do have going on out there, listeners. Like I said, silver doing about 36,500 contracts this week. Trading a bit like an equity right now. Nearly half, about 44% of that paper going out in about 5 days. So very near-dated paper out there. Maybe speaking of what Uncle Mike was just saying about folks wanting to capture some of those swings, some of that gamma out there in silver. By the way, right now it is, since the Monday session, it's off about 3.2%, about 70 cents here. So giving up the ghost. And obviously, if you go back out to the end of our show last week, it's off 2.61%. So we can look really quickly. So I'm not going to break down vol or skew in a contract that goes away in 5 days. So let's go away a little bit farther out. Let's go all the way out to, dare I say it, January, where about 16% of the paper is going up right now. That's going out in about 40 days. So a little bit more meat on the bone out there right now. The vol out there is at a 31. That compares to about a 30.5 for that D's contract that's going away in 5 days. So similar vol levels, all things considered. Skew-wise out here in January, the puts last week pretty much even to the at the money. And then this week, 2.1% cheap. So coming in a little bit. The calls last week, 2.8% bid. This week, 4.1% bid. So the premium is lurking out there in the calls, even though it isn't a huge premium out there. That tends to be what we see usually in the metals. Let's look really quickly at that contract going out in about 5 days. The puts last week, 0.5% bid. This week, 0.6% cheap. So the puts swinging over a full point in the other direction. The calls, 2.6% bid. This week, 4.6% bid. So the bid in both the D's contract going out in about 5 days and the Jan contract going out in about 40 days, both have a little bit of a bid to the upside out there. Let's look at what the hot paper was this week, and it was the 22 calls going out in about 5 days. Leading the dance, doing 3,500 contracts this week. The big day, Tuesday, about 1,400 going up then, most of that opening. Wednesday, about 1,000, slightly closing, so it looks like back and forth paper on this strike. And then today, about 700 and about 500 on Monday. Back and forth opening to closing out there. Worth noting is still about 2,300 contracts open on this strike. And then right behind it, we have the 22 half calls doing about 2,700 contracts. The big day for those also Tuesday, about 1,600. So maybe a bit of vertical action, 22 half going up on Tuesday. Maybe looks like they're closing on the 22 halves and opening on the 22. So maybe a bit of a roll down. That was the most active day for pretty much the 22 halves for the rest of the week there. Only 18 going up today. And then let's look a little bit farther out, see if we see anything else. You know, with the metals listeners, there's always something fun to be found a little bit further out and a little bit further to the upside. Looks like the 22 halves in March of next year were pretty active this week as well. 1,200, almost 1,300 contracts going up. Pretty much all of that on Tuesday as well. So Tuesday was the big day for silver listeners. And looks like that was mostly closing. So somebody getting the heck out of Dodge on the 22 halves here in March of next year, I guess deciding maybe that was a bit of a bridge too far. Either way, maybe they got the move they needed and they wanted to close it out. Either way, closing out the 22 halves here on Tuesday. So it seemed like Tuesday was the crazy day. Unlike gold, it's like we're not seeing any funky flies or crazy ratio verticals to the upside. It seems like it's mostly a straightforward paper. 23 calls here in January, doing about 1,000 this week. They've been trading pretty actively, pretty much all week long. It's like opening all week long as well. So a lot of call action here, and the 22 even calls going out in about 5 days, leading the dance out there in silver. You know, Uncle Mike loves himself a bit of the equities and a little bit of volatility. So let's head out there next.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the wild world of equities these days. You guys know where to find this in that drop down, pop out of the metals, and you're going to go up a few slots to equity indexes. We'll kick things off in the Russell 2000. Where we go from there is anyone's guess, listeners. Before we get into the equities, let's set the tone. Let's set the table from a vol perspective out here. RVX, which is the VIX of the Russell 2000, at about 28, almost and about a half, down about a quarter of a point. Not a huge move in RVX from this time last week. By the way, if you want to deep dive into RVX and all things Russell 2000, make sure you check out the show last week. We had Catherine Yoshimoto on from the FTSE Russell crew out there breaking down the latest developments in the world of small caps. VIX cash, when we kicked off the show, a wee bit shy of the 24 handle, 23.97. It's up about half a point from where it was this time last week. So we're seeing that spread tighten up a little bit. VVIX, so the vol at about an 81 exactly, down about 3.4 points from where it was this time last week. Vol Q, the at-the-money vol of the NASDAQ, almost 28.20. That's down about 0.6 of a point from where it was this time last week. It puts that VIX to RVX, so that large cap to small cap vol spread, listeners, right around 4.5 points. It's about 0.75 of a point tighter than it was this time last week. And the VIX to vol Q, so the S&P to NASDAQ vol spread, right around 4.25. That's about a little over a point, about 1.1 points tighter than it was this time last week. Mr. Uncle Mike, sir, a lot going on in the world of equities. It seems like we were selling off earlier, then it seemed like we were about to rally and maybe go green on the day, And now, as we're talking again, we have gone back to the dark side, sir. What is lighting up your tape in the world of equities, sir?
Well, in looking at it, it's funny. On the last show, we were saying we're hoping for a green day in the market when I come around. The market has not come around as of yet. So the Green Day punk band of the 90s is not getting what they want today, apparently. So I think in looking at it, a lot of this is fear of, or not necessarily fear, but just uncertainty of interest rates. In that Ukraine doesn't seem to be a big deal anymore. COVID doesn't seem to be a big deal anymore, even at all. And we have earnings announcements, but ultimately what's going to move markets is when the Fed's going to make some type of announcement, or some board member is going to say, well, we might be a little bullish, or we might be a little dovish, or we might be a little bit hawkish on it. I really think that that's what the market's laser focused on at this point in time. It's not about earnings right now. It can be, but ultimately, I think it's just about the Fed at this point in time. 3,900 has been kind of a key number for us in the S&P 500, in that we've been really kind of gravitating towards that for better or for worse in recent months. And so it'll be interesting to see if 3,900 can keep its strong magnet on. It is so far, in that we got down to 3,912 on the S&P E-mini. And as we're rallying, just doesn't seem to want to let that magnet go. So we need a bull that is stronger than the magnet in order to make that thing run.
We need that strong bull. Since Uncle Mike is an E-mini guy, we'll hang out there first. 39.49 when we kicked off this segment. Listeners off 51 and a quarter handles, or about 1.28%. Just on the week, how much paper going up in the E-mini this week? About 2.8 million contracts exactly, which is oddly even. You don't usually see those kind of even numbers rolling in here. 2.8 million contract listeners. That's kind of actually a bit of a light week, which does make some sense. We are heading into a holiday week next week, so some folks may be already getting the heck out of Dodge out here. And because it is an equity, listeners, 25% of that paper going up in the contract that has 1 day to go. And you know what a lot of that is. Listen, I'm looking at it right now. 3280 puts. We're at a 39.49. 3280 puts went up 73,000 times this week. We had the 3300 puts also going up 78,000 times. So there's still a lot of that fun to be had out here in the E-mini, listeners. Let's see if we can go file 3470 puts. 12,000 of those. The number of people who are just really excited to pick up nickels, or pennies in this case, in front of the steamroller in the E-mini S&P never fails to astound me, listeners. If we go beyond this, this nonsense paper, let's see if we can find something a little bit closer to home. How about the 4,100 calls went up 2,100 times, 21,000 times, I should say, this week, listeners. The big day, Tuesday, about 7,000 of those, 6,000 on Monday, opening both days. Like I said, that's a fair level. We kissed 4,000, hung out there for a bit. 4,100 right now, seeming like a bit of a distant prospect, certainly by 1 day to go expiration. Probably why we're seeing some more closing paper a little bit on later in the week. They took their shot early in the week, and then not coming to pass and getting the heck out of Dodge. Let's see, beyond just so many of these nonsense puts, listeners, let's go out to the 3,900 puts. Did trade about 30,000 times this week, listeners. The big day was Tuesday, about 9,800 going up on Tuesday, slightly opening there, and about almost 10,000 today, 9,500 going up today. So pretty active day for the 3,900s as well, which makes sense. We threatened it earlier this morning, and we kind of bounced off. It seemed like we're starting to head that way again. So intriguing what's going on out there. Again, equities, they never met a 1 day to go contract that they didn't love. Let's go a little bit farther out to see if we can find any other intriguing paper. 41 halves going up out there with about 13 days to go, about 10,000 of those. Interesting. 3,500 puts. So if you think it's all 1 day to go paper with the puts, it's not, listeners. 3,500 puts in DEES. They have about 28 days to go. They've been pretty active all week long. 31,000 of these have gone up. The big day is today. 11,500 of the 3,500 DEES puts going up today. That's interesting. 3,500. I think that's a level we could see by DEES expiration. Almost 9,000 on Wednesday, 8,500 on Tuesday, 2,500 on Monday. Back and forth opening to closing throughout the rest of the week. Worth noting there are about 31,000 open, which is pretty close to the volume that went up this week. So could be some closing paper going up today. But either way, 3,500 puts. That is an intriguing level out there. Let's go see if we can find any other interesting and or aberrant prints. Unless you like crazy one day to go puts, listeners, that's the lion's share. Let's head on out really quickly to all things rut, see what's going on in the land of small caps out here, listeners. Closing in on 20,000 contracts, so a decent week, but kind of a light week out here in rut. The small caps, by the way, 1831, off another 55 handles, or about 3% just this week. So it's a rough week out here for all things small caps. That alone would put them into pretty much the number 4 spot to the dark side this week if we looked at things just from the Monday session. But of course, we go all the way back to the end of last week's show, in which case they're off about 2%. So intriguing stuff out here. In terms of the action, this is kind of bucking the trend, which is refreshing. About 35, 36% going up in the D's contract. That has a whopping 29 days to go. That's an eternity in an equity. So let's see what's going on out there. By the way, the vol in that D's contract is at about a 26.90, which is fairly close to what we're seeing out there in RVX. It's at about a 28.43. Remember, RVX is that rolling 30-day VIX methodology. It also has some skew baked in there as well, which is why it doesn't line up precisely. And also, we're not pretty close to 30 days, but not quite exactly. So interesting stuff out here. 26.87, like I said, that's the vol up about 0.4 of a point. In terms of skew, last week the puts were 8% rich. This week, about the same level, 7.6% rich. The calls last week, 6.8% cheap. This week, 7% cheap. So not a huge evolution skew-wise out here, which is kind of interesting. It looks like the action was in the 17.5 puts this week in the, like I said, we're at about an 1831. So these are about 80 handle out of the money puts. They were trading pretty actively all week long. The big day, though, was Wednesday, 503 going up on Wednesday. That was mostly opening, so a big chunk going up on Wednesday. We also saw some action in the 1770 puts, about 500 of those going up this week as well. Big day for those today and Monday, interestingly enough, not Wednesday, so no vertical action there. Also saw the 1800 puts, so quite the put strip, doing about 400 or 500 contracts this week. Again, the big days, Tuesday and today. So some staccato paper going up out there. Also some calls to be found. The 1900 calls going up. Most of that action looks like it's today. 150 today. The rest kind of scattered throughout the week. So there are some calls to be found in December, but it looks like it's mostly put action with the 17 half puts leading the dance. You folks always ask us about the small delta calls. Are you seeing small delta calls out there? I guess the answer technically yes. It's like the 1900s with 1 day to go have been trading pretty actively all week long as well. Those certainly would qualify, especially now, as very small delta calls. So it's like you folks haven't abandoned those. How about the 1910s and the 1920s? Also pretty active, also going out in a day as well. So some folks still playing in those small delta calls in the rut, but it looks like the lion's share of the action this week, maybe not surprising given the recent action, has been to the puts. And now, Uncle Mike, because you made me do the show right after the option block, your reward for that, sir, is you get to talk about your favorite asset class now. It is time to talk some crypto.
It's time to explore the volatile world of Bitcoin, Ether, and more. It's time to talk about crypto.
All right, everybody. Welcome to the wonderful Uncle Mike's favorite world of crypto. Uncle Mike, explain to us in 1,000 words or less, why do you love crypto so much, sir?
Because the website that I own makes a great conversation piece at parties. BitcoinReallySucks.com.
Making some good money on that. Got some good SEO on that. I think this week, probably a hot week for you, sir. A lot of traction on BitcoinReallySucks.com.
Well, I mean, it's really not a site. I just own the domain for it, but it is for sale. If anyone wants to buy it from me, make me an offer.
I imagine the native searches to that domain spiked up over the last week or two. I'm just throwing it out there, sir.
Most likely.
Of course, listeners, if you want to deep dive into all things crypto, check out our crypto rundown program every Monday right after the option block there. In fact, one of our friends from that show going to be doing our pro Q&A a little bit later today. They provide all the analytics for us over there, Genesis Volatility, to break down all the skew and the vol and what's going on out there in the world of Bitcoin and ETH and Solana and all your other favorites. Of course, if you want to see what's going on with the CME products, we can do that for you here, cmegroup.com/TWIFO. And luckily for you, we got a whole cryptocurrency section. It's right there below the ags. We're going to kick things off. Like we said, Bitcoin was our number one dark side mover this week, off 7.34%. Coming into showtime, still north of the 16,000 level, 16,520 to be precise. So up about 3% from the Monday session. But of course, you go back to the end of our last show, different story. In terms of action, these big Bitcoin options, these 5X Bitcoin options, the story with these things has been just they can't get out of their own way. They can't do a lot of paper. For a long time, they were looking at 20 contracts a week. A big week was 200. What a crazy week. Last week and this week are starting to drive some paper out there. Weirdly enough, almost the exact same number going up last week and this week. About 1674 last week, 1628 this week. So apparently it takes some earth-shattering news out there in the crypto space to really drive some action. And of that nearly 2,000 contracts, remember, these are 5X contract listeners, so they're pretty beefy. What was the big dog out here? Looks like we have a, shall we say, interesting vertical out here. We got a June 25,000, 35,000 vertical going up 200 times back on Tuesday. So that was it, looks like. And then opening on both legs, looks like obviously buying probably, given what we know about this paper, probably buying the 25,000s, selling the 35,000. So what do you think, listeners? Back to 25,000 by June expiration of next year. Seems like we got some paper just to that effect this week. Nearer dated contracts, it's like the 20,000 puts, which are pretty sizably in the money, also pretty active. And then my favorite, the Jan contract, the 10,000 puts have been trading pretty actively all week. Every day they've been trading, which is kind of interesting. This strike, 10,000 strike. I know it's a popular psychological level, but we still have a ways to go between 16,500 and 10,000. Yet the 10,000 puts are going up pretty actively all week. It's like these 16,500 puts also trading pretty actively. And by actively, a couple hundred contracts, listeners. But still, for this product, that's a lot. And looks like they were both trading. It doesn't look like it's vertical paper because doesn't line up exactly, but they both were trading every day, which is interesting. 10,000 puts by Jan expiration, listeners. What do you like better? 25,000, 35,000 vertical by June expiration, or the 10,000 puts by Jan expiration? Because we've got both. We'll see if you folks out there on the retail side are getting a little bit more active out there in the micro Bitcoin here. And the answer, weirdly enough, is still no. I don't know what it's going to take to really kick these products into high gear. Only 227 contracts on the tape. This week, we go out to last week, a little bit better, about 2,000 contracts. But still, it's a weird week when the big 5X contracts and the micro contracts are doing similar volume numbers. That just doesn't make a heck of a lot of sense. So for whatever reason, these small ones still not resonating. I think if ever there was a week where maybe you'd be driven to a centrally cleared and regulated Bitcoin product that was bite-sized for retail, maybe this would have been it, but not the case. So last week, again, almost 2,000 contracts. The big dog was the 18,000 puts, going up about 500 times. Again, those now wildly in the money. Really quickly, since we're talking about crypto, let's go on out to ETH as well. It's been making some headlines of late. All these major crypto assets getting sucked down the FTX vortex lately. ETH coming into showtime, 1209 and about a half off. Well, we had a 1600 by this time. This is last week's, and that's why that's throwing me old data. There we go. Last week it was down 440 handles. This week, not so much, down about 17 handles, trading about 1192 and a half right now. So a little bit shy of that 12,000 level. The big ETH contracts, again, these are 50 ETH, so not getting a lot of love out there this week. Last week doing 320. So that was their biggest week by far. I think it's more fascinating to see what's going on the micro Ether side. That one, again, we talked about this with Carly Garner on the show before, the weird staccato rhythm of the paper out here in micro ETH. Some days they trade pretty actively, then they do nothing, and then they do something again a couple of days later. It's very binary. It's very on and off with these contracts. And last week, 10,172 contracts, so a decent clip last week. And this week, we're looking at 32 in the micro Ether. So yeah, this product is a hard one to come to grips with for whatever reason. Looks like the big dog last week, 1,100 calls, doing 2,410 contracts last week. Again, we're at about a 1,209, at least we were, an expiration last week. Looks like most of those trading last Thursday. We had 2,172 on Thursday, 238 on Wednesday. That was it for the rest of the week. Again, kind of getting back to that weird staccato rhythm of a ton of paper and then nothing. There's not even a 10 lot the other days the rest of the week. So weird paper out here in these, but more, which is good to see, but intriguing nonetheless out here. Again, if you want a deeper dive into all things crypto, the Bitcoin, the ETH, the Solana, the volume, the skew, the OI, all that crazy stuff, unusual activity, and a whole bunch more. Check out the Crypto Rundown every Monday. And of course, if you're on the pro side, stay tuned for our great pro Q&A coming up a little bit later today with Mr. Greg Magadini and Mr. Uncle Mike, just to show that I have no hard feelings, that I'm a very nice guy. I'm just doing the Uncle Mike greatest hits today because we did have the Ultra 30 year in our movers and shakers this week. So off to the rates we go.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, everybody. Welcome to the head-scratching world of rates these days, listeners. Where do you find this? Pop out of that crypto drop down. Go all the way down. We're going to go down about 4 slots to interest rates. Then we're going to hang out in the U.S. rates. I was joking about the Ultra 30 year. It's obviously in our movers and shakers, but it did a whopping 232 contracts out there. So we'll hang out in another product. I think more Uncle Mike approved, which is, of course, his favorite contract to get on the boat with, the 10-year note. Mr. Uncle Mike, sir, are you getting on that boat this week?
Jump on the boat with a 10-year note, whether you're long or short. Get on the court. How's that?
Look at you, just a rhyming machine, sir. Anything lighting up your tape out there in the world of rates this week, sir?
I mean, just looking at it, we had a little bit of a double bottom in the 10-year note. We're at 108.83 on, I believe it was October 21st. And so from there, we rallied a little bit for about a week. And then probably about 2 weeks ago, we get close to testing those levels, not quite as much. And then it's kind of like it's bizarro world right now in that when bonds rally, stocks rally a lot of times. And so the 10-year note has had a little bit of a rally recently. It is above its 50-day moving average again. Right now we're in the 112 world, or in the 112 on the 112 handle. And so when the note rallies, in years past, a lot of times stocks and bonds would have an inverse relationship. When things are bad in the world of stocks, then there's a flight to safety, and so bonds would go higher, and vice versa. If there's something good happening in the world of stocks, well, you got to sell your bonds and buy stocks. But that's really not how it's happening this year, just because of the interest rate environment with which we live. So now we have stocks and bonds rallying and going down together. And I think that with the 10-year note where it's at right now, we are above the 50-day. And so what is going to be interesting to watch is that if the Fed at some stage raises 50 basis points instead of the expected 75, or 25 instead of the expected 50, or whatever the case may be, not as much interest rate hike could be very good news in the bond world because of the fear that's in the world of bonds right now. So I think with the 10-year note where it's at right now, it's definitely closer to its lows than it is to its highs. But as with anything, make sure you manage risk carefully.
Let's see what's going on out there in the 10-year note this week, listeners. A little bit more paper going up here, about 2.5 million contracts versus the, 230 odd going up out there in the Ultra 30 year. Of that paper, 53.9% going up in the D's contract, has about exactly 14 days to go, which is, fortunately for us, exactly our cutoff. So let's hang out there, listeners. Where is the 10-year note right now? About 112.10. Up a little over 2, about 2.1 points, or about 2.06% since the Monday session out there. In terms of vol, again, you're not coming to the rates complex. Outside of SOFR and the old Eurodollars, you're not really coming to the rates complex for vol. That is reflected here. The D's contract, 6.25, down an apocalyptic 1.75 points. That's a heck of a lot of vol coming in the old 10-year out there. Let's go back out here. Let's see. There we go. Make sure they're giving me. That's even better. That's right. A little bit better now. This week is actually over 3 million. They were showing me last week's numbers again. 3 million contracts on the tape, actually, for this week. And the vol, 7.6, coming back in 1.3 points. That makes more sense. Last week we had, of course, all that madness with the inflation, hence the vol coming out. But little bit of juice coming back in this week. Let's see. In terms of the skew, the puts last week, 2.8% bid. This week, 5% bid. And the calls last week, 2% cheap. This week, 4.3% cheap. So you got a bit of a slight equity skew out here, listeners. The puts are bid and the calls are offered. And let's look at some of this vortex of paper out here, listeners. It was the 113 calls. By the way, this week we're at a 112 and the old 316. So you don't get to see that too often. That's always fun. That's where we're hanging out right now in the 10-year and the 113 calls. So slightly out of the money calls, leading the dance this week with 134,000 contracts on the tape. So you're talking here, just in these 113 calls, listeners, more than silver and your Russell 2000 and a few other products, Bitcoin and ETH, and a bunch of other ones we talked about, more than all those combined just in these 113 calls. It shows how much paper goes up in this complex sometimes, listeners. Active, again, all week long. The big day, Tuesday, about 45,000 on Tuesday, slightly closing there. 43,000 on Wednesday, closing there as well. 25,000 on Monday, also closing. And today, about 22,000. Obviously, we don't know the OI swing on today's paper. There still is some size paper left on the strike. 53,000 contracts could certainly be closing on today's paper as well. And then right behind it, we have the 114 call. So even further out of the money calls, 112,000 contracts going up there. The big dog there, Tuesday, again, 37,000 there, 35,000 on Wednesday, 26,000 today, 12,000 on Monday. Again, closing throughout the week. So a lot of people taking off. A lot of upside out here in the 10-year note. Probably why we're seeing that call wing get a little bit cheaper out here this week. That's not enough, listeners. How about 100,000 exactly of the 113 half calls? So splitting the difference there. Again, the big day for those was actually Wednesday. 45,000 on Wednesday, 25,000 today, 20,000 on Tuesday, about 9,000 on Monday. Back and forth opening to closing on this one. So it wasn't all closing. It was mostly closing, but it wasn't all closing. A little bit of opening business going up on Tuesday there. So just right there, listeners, we have about almost 350,000 contracts. That is just a tsunami of paper in these products out here. 114 halves, also pretty active in December, doing 85,000 contracts there. Also active in January, 88,000. Maybe a bit of a roll action. Dece out to Jan. Those numbers lining up very precisely. Also the 112 halves going out in about a day. Also pretty active out here, doing 78,000 contracts. Almost all of that on Monday. 68,600 of the 112 halves going out tomorrow. Went up on Monday. Pretty much all of that closing. So folks were just bailing on these on Monday en masse. And then the rest kind of scattered throughout the week. But nearly 69,000 going up just on Monday. A very active day for these 112 halves. All right, we did crypto, we did metals, we did equities, we did rates. What's left here on our movers and shakers as we're coming up against it, listeners? We got a bunch of energy in there, so let's head out there next.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, you know where to go to find this. Go into that drop down, pop out of rates. You're going to go up about 3 slots to energy. I think we'll hang out in crude oil first. WTI is our number 5 offender. And then we have RBOB number 4 to the dark side. And then nat gas number 3 to the upside. So a lot of energy in our movers and shakers this week. Mr. Uncle Mike, what is lighting up your tape in the world of energy, sir?
I think the big story is crude. Just with what's going on. I mean, it still is a story at this point, but it's I think it's more of an inflation story more so than anything. Initially, we had the run up in crude earlier in the year because of the fear in Ukraine or the war in Ukraine. And so from there, we have less of a supply of it. And so for now, we still do have less of a supply of things, and that people don't really want to buy oil from Russia. That still is the case. But what's going to drive oil even higher, or what's going to make oil go to levels with which are higher than the 100 level? What's going to actually do that? Well, at some stage, we have to have all this inflation and demand to where people don't care about paying $4 and $5 at the pump. And right now we still do, or people still do care about that. because wages have not gone higher. So I think ultimately with oil, I think it's at a level right now to where if we continue to have the hard inflation numbers and we continue to raise rates, then that's going to slow down the economy and ultimately slow down demand and have kind of a ripple effect on that. Of course, the other thing to watch right now as we're heading into the winter would be that of natural gas. I know on the previous show, I talked about some natural gas in a different manner, and I was accused of swearing, but that's a whole nother story. Natural gas has gotten its face ripped in over the course of, over the course of the last 3 months or so. We had highs over the $10 level in late August, and now we're down to the 6.5 level. At one point, we were even below 5. Now, that's kind of par for the course for natural gas, but what I'm going to be watching with this is that if we do have a very cold winter, could this potentially be a buying opportunity for natural gas because the demand could go up? That's kind of what I'm seeing right now in the energy space.
All right, listeners, let's see what kind of paper we're seeing out here. Get into the WTI drop down first. How much paper? A pretty active week. 475,000 contracts on the tape for WTI. Usually we'll see somewhere around 400,000 contracts. That's a pretty robust week. And looks like about 32% of it is going out in the Jan contract. It has about 28 days to go. So we will head there as well. What is your vol right now in WTI, the Jan contract? By the way, we're hanging out about an 81.5 right now in that contract. In terms of vol, 46.31, so up about a point. So again, if you're hand-wringing about all this equity vol, not up to snuff for you, Energy says, hey, come take a look at me, kid. 46.31 out there right now. Skew-wise, 3.6% bid with the puts last week, 2% bid this week, so still a little bit bid, but coming in. And the calls, 1.8% cheap last week, this week, 1.4% cheap. So not a huge move skew-wise this week. Things are slightly biased, but not much. Mostly kind of a flat skew, which again kind of shows you we're hanging out at this interesting range right now where the market's telling you, not really sure where we're heading next. In terms of action, what do we see out here? The big dog this week, listeners, even though 32% of the paper went up in the Jan contract, the most active contract was actually in April. It was the April 120s doing 30. Oh, we're not going to see this. Yes, we are. It's the 1 point wide verticals again. Every week, this person sucks me in, listeners. I keep hoping that's not going to be the case. But once again, we've talked about this ad nauseum. I won't repeat it. But this week, it's the April 119, 120 vertical that is doing 30,000 contracts each. So 60,000 total, obviously. Went up 15,000 times on Monday and 15,000 times on Tuesday, opening on both days. So whoever this is, whatever fund this is that has decided this is their way to go, they love this and they keep doing it week after week. It's also what's distorting the volume numbers out here. Let's get away from this noise. We've given this more than enough time, this stuff. Let's go back to the actual contracts that reveal actual economic intent. It's the par calls, listeners. I'm doing nearly 16,000 contracts in January. That's where the big dog was this week. Again, active all week long. The big day, though, was Tuesday. Nearly 10,000 contracts going up on Tuesday. 2,100 on Monday, 1,300 on Wednesday, 2,400 today. Opening all week long. So opening on the pars. These have about 28 days to go. I think we're heading back to the par strike anytime soon, listeners. I'm sure your wallet hopes we don't. But nonetheless, a lot of opening paper on the par strike this week. Like I said, we didn't see a huge evolution on the skew, so no real insight into what they were up to on the opening side out there. So interesting if they were overwriting or just gobbling them up. Also saw 10,000 of the 90s. Those are obviously closer to home out there. We're at about an 81.45 right now, listeners. So the 90s doing about 10,000 contracts. Again, the big day was today, about half of that, 5,000 contracts today. The rest scattered throughout the week. And again, opening throughout the week out here. Also saw about 9,300 of the 95 calls. So if 90 and 100 won't do it for you, about the 95 is a big day for those today and Monday. Almost 3,000 each of both of those days. 2,000 on Wednesday and about 1,300 on Tuesday. Let's look really quickly, see if we see any other interesting and or aberrant paper out here again, those stupid verticals in April, sucking up all the oxygen in the room. The next most active contract in April did 1,100 contracts. So yeah, 30,000 lots and then that. Good stuff. How about the 130s, listeners? In Dece of next year, they were pretty active, doing 7,000 contracts this week. It's like also the 120s are doing 5,000. And that's not optimistic enough for your blood, listeners. Allow me to present. Wow. I think all of us hope this strike never sees the light of day. These are the Dece 2024 250 calls. Yes, 250s. 18,200. Looks like a size fly went up on Wednesday, listeners. 18,000 of the 200 calls against 17,300. So 8,000. I meant 8,000 of the 200 calls against 17,300 of the 250s, and then 8,000 of the 300. So the 200, 250, 300 butterfly went up in Dece of 2024. Again, 8,000 by 17,000 times. Wow. Interesting. An interesting way to hedge or perhaps speculate against just absolutely insane energy. Where are we as a society, listeners, if crude is at 250 by Dece of 2024? I shudder to think. I said really quickly because we're coming up against it, listeners. And I do need to rest my voice a little bit before the rest of the onslaught of content we have coming your way later today. Uncle Mike mentioned it. It is one of our movers and shakers this week. Let's hit nat gas really quickly. 641 right now. It's done about 400,000 contracts this week. So that's pretty much in line with what it normally does. 38% of the paper going out in the contract that has 8 days to go. What is the vol out here? We're back in triple digits across the board, listeners. Front contract 102. The Jan contract that has 40 days to go, that has a 117 for the vol. My goodness, things are getting frothy out here in nat gas. Let's go out to Jan really quickly because that did about 16% of the paper. Even though, the most active contract this week actually was in February. It was the Feb 20s. Did 10,700 contracts. All of that today. It appears there could have been a 20 and then a 2010. 1 by 2, 4,500 of the 2010s by 9,300 of the 20s went up today. If that's the case, we're getting the same kind of nonsense paper out here in NatGas that we're getting in WTI. Let's go back to these 5 puts. That's where looks like the lion's share of the paper was going out in about 8 days. They did 13, almost 14,000 contracts this week. Again, active all week long, opening and closing all week long. We're at a 641 right now. These about a 0.40 out of the money. Puts here doing pretty decent paper. They were followed by the 4 puts. Interesting. 4 puts, the 4 strike by 8 days, listeners. That would be interesting. 13,000 of those going up as well. The big day Wednesday, about 5,000 on Wednesday, 4,000 today. The rest kind of scattered throughout the week. Back and forth, opening to closing. And not to be outdone, there were some calls trading as well. 13,000 of the 7 calls going up. Again, the big day today. Today, a big day for NatGas. 4,200 contracts today. Almost 4,000 on Monday, 3,000 on Tuesday, and 2,000 on Wednesday. All right, listeners, that music means we are out of time here on TWIFO for this week. Don't worry, if you're one of our pro crew, hang out. My producers were kind. I do get a little bit of a respite between TWIFO and Pro Q&A. Pro Q&A coming up at 3 p.m. Central, so you got about an hour. Get a beverage, relax, we'll pump some fun stuff into the live chat. We'll be back with Mr. Greg Magadini to answer all your questions about crypto, and God knows you got a ton of them. So get those in now on the members hotline or via the live chat, and we'll get as many of them onto the show as we can. But before we go, Mr. Uncle Mike, if folks want to reach out to you to talk energy or talk rates or equities or silver or your beloved crypto, where should they go? What should they do?
Check out my website, stcharleswealth.com, if you're looking for a financial advisor who delves in the derivative space, if it's appropriate for the client, of course.
There you go. stcharleswealth.com is the place to go. You know where to go to find all these reports for yourselves. CMEgroup.com/TWIFO. TWIFO is the place to go to kick the tires and light the fires. Whenever you want. You want to check NatGas at 3 a.m. on Saturday? Go ahead. The reports are live. We won't judge. We won't tell anybody. CMEgroup.com/TWIFO. And of course, If you want to deep dive into all things RUT, the skew, the vol, what's going on from a correlation perspective, a lot of great data to unpack over there. FTSERussell.com, FTSERussell.com. Now we got the new event contracts. A lot of cool stuff going on over there. Give them a follow on Twitter while you're at it, at FTSE Russell, FTSE Russell, all one word. That's going to do it for us on TWIFO today. Back for you pro folks in a little bit with another great pro Q&A. Double pro week this week because we love you folks and because they hate me. Double pro week for you folks. Back again tomorrow, noon Central, 1 p.m. Eastern for vol views. Then for all you pro folks, back again after that for options oddities. And of course, next week, Thanksgiving holiday here in the U.S. So we will be off next week. We'll be back again live for TWIFO in 2 weeks. And we'll see you then. Have a great holiday and stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.